Hello, people. This week in the trading strategies, what I'm going to discuss with you is something that is really powerful. It is known as divergence strategy. So, divergence is when you have an indicator and you have a price of the stock moving in opposite directions. So, this is something that indicates that though the price is moving in a particular direction, but it may not sustain or it may reverse. And one of the best indicators in which we can pinpoint diversion is definitely RSI, because RSI is a momentum indicator. If we see RSI moving in a different direction from the price, that means that the momentum of the stock or the instrument is reducing, and if the momentum is reducing, the chances of reversal becomes very high. Again, show you a few examples in this video, but you should remember primarily this is a setup. After this, entries can have been in multiple ways which you have to define for yourself. So if you look at my chart, this is the first point that I have drawn here. You can see the price of Nifty on 7th of August was first here somewhere around 19620, and then we had a gap up on the next day at 19631. So the price went up. But if we look at the RSI for the same thing, we'll see that the RSI was continuously going down. So this gives us that indication that this gap might not sustain and it may move downwards from here. So this is a good short setup in general. Now, what could be the entry for this? You could have multiple. That is something that you have to define. This is just this video is just focused on the setup. For entries, you could have something like if three candles come down one below the other, or if the previous swing low is broken. So this is the previous swing low before this setup failed. So if this is broken, maybe this is somewhere I would like to enter, and then there can be an exit based on the criteria. Now this is the second part where we see the same thing. You see the price of the stock went down, but if you see the RSI, it was moving up. So this again shows us that the downward momentum is now ending, and we could see an up move. And as you can see, the up move happened, which was really wild and good up move. This is an intraday chart. We are looking at 5-minute chart, if you can see, but this strategy can also be used in 15 minutes, 30 minutes, 1 hour setup for doing positional trades. So there is this another example that you can see the price was going down, the RSI was moving up, but this actually did not work out. As you can see that the price moved up a bit, then fell down again. So here the setup failed. So a good point of stop loss for this kind of setup is that the high or low before you enter, that should be your exit point for taking a loss. Again, this is another example that you can see here, that this is where the price was going up, but the RSI was pointing down, and then Nifty spiraled down, but then it recovered. That is why you need to have good entries and exits defined. So this is about divergence. Let me know what do you think about this setup in the comments, and please do like and share the video if you enjoyed it. Thank you.